Hey everyone, welcome to another dividend stock investing video. I own a company, the Home Depot, ticker HD. I am up 401% on that investment with a dividend yield of 9.39%, true dividend yield on cost. I actually shared a case study on this stock the other day on my Patreon with my corner patrons. Check out the pinned comment below if you'd like to learn more about that. The reason I'm sharing this case study in the video today is it really hammers home this point that time in the market is so important. I actually never put in that much money into the Home Depot, but because I've been in this stock since 2014, my investment has just grown and snowballed into a good sized position in my overall dividend stock portfolio. And so I know a lot of folks at home, they're thinking about themselves. They're also thinking about their kids and the future generations of their family. And they're thinking about how they can create dividend income forever, how they can create this massive cash flow and a huge dividend stock portfolio. In the video today, I want to cover a variety of topics that really speak to this point that it's not about how much money is invested, but it's about how much time elapses and how much time someone has in the market. Now, obviously, I also have investors here in the community who are closer to retirement. They don't have as many years. You all should hang into the video as well today because there's a lot of good information in the video. But I would say that this video really specializes for investors who have a lot of time on their sides. And I'm going to speak in the video today about my experience as a father and what I'm doing for my children this holiday season for Christmas, and what I'm doing on an ongoing basis to help set them up as investors, as successful investors, as dividend stock investors for the long term, so that going forward, there's this concept of forever dividend income. Get ready, everyone. I have a really exciting video for you all today. Welcome to PPC Ian. This is dividend stock investing for everyone. All right, everyone. So I have a bunch of topics I want to cover in the video today. I actually want to start with a stock purchase. This is a stock I do not cover so much on my channel here because it's one of the stocks that I bought for my kids and I've been averaging in for them over time. But it's a perfect case study of dividend stock investing. So as you can see in front of you on the screen right now, I want to share a few tidbits about the Hershey Company. For those that don't know, Hershey is a company that makes chocolate and sweets, but they also make other delicious treats such as Pirate's Booty, and they're in the process now of acquiring a pretzels company as well called Dots Pretzels. And so this is a company that I've been averaging in for my kids over, I'd say, a while now for holidays and birthdays. I like to give the gift of stock rather than just tangible items because this is the gift that will truly help develop their education and also just open doors for them as the years go by. Now, the Hershey Company, I actually bought their Christmas shares back in September, and the purchase price was $172.94. But right now, Hershey is trading at a current price per share of $178. And so the analysis that you see here on the screen is based off the current share price right now of $178.04. So analysts expect this company to earn $7.09 this year, $7.51 next year. And so if I take the current share price and I divide it by those analysts' EPS, earnings per share estimates, I get the forward PE this year of 25.11, next year 23.71. For a company that is growing at the pace of the Hershey Company, I would say these seem like reasonable price earnings ratios in the overall market we're in right now, which is a market that is filled with expensive stocks and a quick pace of inflation. So many of investors have flocked to high quality companies like the Hershey Company as a way to hedge their assets and a way to save their wealth from being eroded away by inflation. And so as you can see in front of you right now, the Hershey Company pays a really awesome dividend. They're paying right now 90.1 cents or $0.901. They actually recently increased that from 80.4 cents. And so that recent increase was a staggering 12% increase. I didn't really cover this on the channel because, again, I don't look at this company too closely other than when I'm buying it for my kids from time to time. And it's so nice just to see that that's the beauty of dividend investing. It works for all of us when we're not even watching the stocks day to day. It's like clockwork. Those dividends just keep increasing at high quality companies like Hershey. And so on an annual basis, they're basically paying $3.60.4 in terms of dividends, and that gives a starting dividend yield of 2.02%. Now, keep in mind, that's not a really high starting dividend yield. It's not really exciting. I'm making only $2 on every $100 invested per year in terms of starting dividend income. But this is going to be a really important theme throughout the video today. As I think about investors like my kids, they have a lot of time on their side. I like to actually skew towards stocks that pay really low starting dividends, but increase it at a rapid pace. And in fact, for people like my kids who are really young, I actually even like dividend stocks that pay next to no dividend, but there's opportunity for them to increase it rapidly over the long term. And I'll get more into this later. But as you can see in front of you right now, this particular company has a payout ratio of 50.8%. And so there's room to increase the dividend. And just as they've increased it over the last 5 years on average by 7.8% per year. My kind of sweet spot for dividend increases is about 7% per year on average. And so this particular company is doing much better than average. I would say in reality, most of the blue chip dividend companies I own these days, they're struggling to increase the dividend by 7% per year on average. And so Hershey Company is definitely classified not as a current high yielder, but as a grower. And this particular company has a market cap of $36 billion. Now, what I like about it, and I will link in the description and the pinned comment below. I did a whole video analysis on this company, so I don't need to go through everything. But what I really like about it is everyone loves chocolate, whether we're in the middle of good times or bad times, holidays, or even the rest of the year. People like to eat chocolates and sweets. I really love the fast dividend compound annual growth rate. It's kind of like the Home Depot. I was talking about the Home Depot in the introduction today and how I am yielding over 9% true dividend yield on cost, even though the starting dividend yield on that company, it's never too high. It's a perfect example, and it's a perfect kind of, I would say, relatable company to Hershey. They're in completely different industries, but the profile of the companies are similar. They're both growing quickly. They both pay a low starting yield, but they grow the dividend over time. And so that's the benefit of a company like that, is the yield on cost for someone who can afford to wait around for some time, like I did with the Home Depot. These types of companies can work a lot of magic for those investors who have more time on their sides. And so as you can see in front of you right now, a few more things about this particular company. I would say the payout ratio is reasonable. Don't forget they own the Pirate's Booty, a brand of snacks, which are really good. I don't really have an opinion on this yet, but it's interesting that they're buying some pretzels companies like Dots Pretzels right now. And what I don't like about the Hershey Company is a lot of their focus is primarily on the U.S., so United States market. It's not as much of a big kind of global brand portfolio, but perhaps over time, as they get into certain niches and new products, maybe they will expand upon those. Who knows, globally. But right now, it's really a strong U.S. focus with this particular company. And so anyway, what I did is I purchased the Hershey Company for my 2 kids for Christmas. I did this a few months ago, and I did it just to be ahead of things. And so from a financial budgeting standpoint, I've always found that if I have the money, it's ready to go. It's better just to deploy it in the stocks rather than let it sit around, because if it sits around, maybe it'll get spent on something. Maybe it'll just kind of fall through the cracks. But if the money's there, I've earned it, it's ready, it's earmarked for something, I just like to buy that stock right away. Or, for example, pay that bill that I know it's upcoming, the bill's not even due yet. I'll just pay those bills ahead of time, and so I don't have to worry about it, and it makes my financial planning and my budgeting just a little bit easier. And so I hope through the Home Depot example and also the example from Hershey Company, you can start seeing this idea that for folks with a lot of time on their hands, these growers, these dividend growth companies can be really, really exciting. And I want to get into a few thoughts now. This one's going to be very helpful for parents out there. So if you have kids or you're thinking about having kids, stay tuned for this next segment here, because I have a few thoughts that I want to share with all of you as an investor who's educating his kids about dividend stock investing. And so after that, by the way, I have some cool crypto content actually at the end of the video today as well. Even though I have a separate crypto channel, I thought I'd throw it in there because it ties into this theme of investing and educating kids. And so anyway, as you can see in front of you right now, what I want to do next is I want to dive in to a few thoughts here about setting your kids up for success. And I think the first thing is to realize our world is changing. Jobs of the future are going to be very different than today's jobs. There may not be as many jobs in the future. And so personally speaking, this is probably the most important time in the history of our world, in my humble opinion, for average everyday people around the world to embrace investing. Now, I love dividend stock investing, but I think all forms of investing are really great. And all I'm saying is with automation that is forthcoming, with the way our world is changing, with government stimulus payments, with increased lockdowns, those types of trends, I don't want to just look at things as a glass half empty. I want to look more as a glass half full. But I'm just saying, in future generations, I don't know if people will be working as hard as folks do now in the traditional ways that folks work right now. I don't know if people in the future will have certain jobs that are more manual in nature. There may be some very highly skilled jobs, especially in the engineering and programming industries, and I think jobs will change. But I'm trying to say that having an investment portfolio that spits off cash flow is going to be a safety net, not only to live one's best life, but honestly, in my humble opinion, to set oneself up not to have to worry so much, because we just don't know what the future holds. But we know if that passive income is coming in, the future is going to be really bright. And so that's the first thing I want to realize as a backdrop to this philosophy. Next, what I want to share on the screen with all of you is how I train. Now, my daughter is too young, and so I have started training my son, however, on investing. And I just have a few things that I wanted to share here. First and foremost, I made a stock trade on Monday. It was really fun. I share that on my Patreon with all of my patrons, all the levels there. And basically, I had my son actually place the stock trade on my computer. And this is the first time he's done this. He doesn't have many computer skills yet. He's really young, but this was really fun. It was a hands-on way to get him involved with a stock transaction. I would say also my son, I like to sit at the bar in our house and just kind of sit there and work on my computer, work on stocks. And now my son, he'll regularly come up and sit next to me when I'm researching stocks, and we just talk about the metrics, and I just try to show him what I'm seeing. This is what a ticker symbol is. These are some of the different metrics. This is a stock chart. I'm just going through the basics, and it's a really good time for us to sit down and bond together. And also, we just try to kind of talk about stocks more regularly. I like to ask my son like just a quiz. I ask him random things like, what do you like better? Do you like the Hershey Company better or Disney better? These are two stocks that he owns. Or I ask him, what do you think about Hasbro as an investment? I own that one. He doesn't own that one yet. He really wants to own it because he loves some of the Hasbro toys and products, such as the Beyblades, but he doesn't own that one yet. And so we just go through these scenarios. Well, why is this one better? Which one do you feel is a better investment? And so just gets the conversation going about the topic of investing. And I would say more than anything, I have found more time and more opportunity to bond with my son recently, just over this topic of investing. And so it's been a fun way just to kind of spend time with him. And so I want to keep going. As you can see in front of you on the screen right now, the next topic that I think is really important as a backdrop, if you're thinking about setting your kids up for success, is thinking about this annual gift. Now, I'm not a licensed tax advisor. I'm not providing tax advice, but what I have researched and my understanding is that each parent can give up to $15,000 to a child, so $30,000 a year total if it's coming from both parents, and that would be gift tax free. Any amount over that, there would be a gift tax. Now, most won't need to worry about these limits because these are pretty high limits in terms of offering money to children for their investments. But that's something to keep in mind, especially for very high net worth earners who might be trying to gift a lot of money to their kids. And so that's an important backdrop. Now, the next thing I want to share is some more technical details that are really important as you're thinking about setting up investment portfolios for your children. And so as you can see on the screen right now, and I will say a lot of this is United States, US focused. I'm using the laws and the regulations from the US here. And so I know I have a lot of global community members as well. I hope you all choose to hang in as well, because I think this is a really interesting case study, and it just gets the mind thinking about future generations and about really this concept of dividends forever, not even just for ourselves, but for future generations, dividends in the hands of all of us. And so I would say that one really important thing that I highlight here is if a child is under 18, and the child can be under 24 in some cases, because if the child is still in college, for example, they could be considered eligible for these particular guidelines. Basically, if dividend and interest income that is earned in their portfolio is less than $2,000, that child does not have to file taxes. This is really huge. And so let me tell you, let's just take Hershey as an example. Let's say all the money was in Hershey. Hershey pays about 2% dividend. And so if I take $2,000 and I divide by 2%, that basically puts the portfolio size at $100,000. And so if a child theoretically had a $100,000 portfolio all in Hershey earning $2,000 or just under, say, $2,000 a year, that child would not have to pay taxes on that dividend income. And so once, though, the child's income gets higher than that, that's when taxes are triggered. And so you can quickly see why I love companies like the Hershey Company. I love companies like Disney, quite frankly. It suspended their dividend, but should bring it back at some point in the future, because the dividends, currently speaking, don't have to be huge for a really young investor. The best thing is to keep the dividends low, but growing quick enough so that by the time they're 18 or 24 and they're kind of on their own, they're paying their own taxes, they can kind of pay the tax rate on the dividends at that time, but it can compound all those years when they're just children tax-free, as long as the dividend amount and the interest amount, if there's ordinary income coming in, interest as well, is less than $2,000. So this is so critical. And this is why for kids, when I'm choosing stocks for my kids, I always go for the low yielders, but they're growing the dividend quicker. Now let's keep going. As you can see in front of you right now, the next thing I want to show all of you is just a helpful note for larger portfolios, because there are a lot of higher net worth individuals I know follow this channel. Let's say you have set up portfolios for your kids, and they're lucky enough that the portfolio value is driving over $2,000 a year in dividend and interest income, but it's less than $10,000 a year. Now, in that particular case, the parent can choose to have that dividend and interest income reported on their own return. And so that's really helpful, because once the dividend income, the interest income gets over $10,000 for that minor, then that child would actually need a return, their own return, which can, it's not the end of the world, but it could create some more complexity, some more stress, some more bookwork around tax time. And so just something to keep in mind for those even contributing more money to their children and building these huge portfolios. As long as the interest and dividends are below $10,000, but higher than 2,000, that could be reported on the parent's tax return. So something interesting that I learned. Again, I'm not providing tax advice. This is something you'll want to speak to your licensed tax advisor about, but this is stuff that I learned researching on the internet. Let's keep going. As you can see in front of you right now, the takeaway, as I really want to underscore, is I love low-yielding dividend stocks with fast compound annual growth rates. Honestly, I love these as well, even for young investors who are, say, if I were hypothetically, like, say, 25 years old right now. This is what I'd be focused on as well, because so much time on my side, I have lived this through the Home Depot example. I don't necessarily need high dividend yield when I'm 25, unless my goal was to retire by the time I'm 35. And I know a lot in the community do have that goal, and so everyone's unique, but I'm just speaking to my personal situation, putting myself hypothetically back in a younger person's shoes. I think for kids under 18 and also young adults in their 20s, I love these growers. But anyway, my kid's currently on Hershey and Disney. Disney's yielding nothing now because they suspended the dividend. I think it will come back. In terms of future holdings, I've got my eye on the WD-40 company, which is yielding 1.24%. I'll link to my analysis on that one in the description and pinned comment below. I did a video analysis on that. I like Hasbro too, but that one has a higher starting dividend yield of 2.74%. I would want to keep Hasbro at a lower allocation in their portfolios because it does have a higher starting dividend yield. And if they keep increasing the dividend over time, that's one that could skew higher dividend income in their portfolios. And as another takeaway, I'm even considering stocks that pay no dividends. These could be great, especially ones that I think may pay a dividend in the future. And so that's how I'm thinking philosophically about setting my kids up for success. And I started with the education first because, quite frankly, it's not about the amount of money that's put in. It's not about any of that. It's about the education, the bonding, and teaching your kids all of the knowledge that you've learned, because this is the community here of hands-on investors. And so I would also say for folks at home that don't have kids, maybe even if maybe you work in a profession where you have an opportunity to mentor people. Maybe you have colleagues who are younger, who are more junior at your company, and you can mentor them. Or maybe you're a teacher at a school and you have an opportunity to mentor kids. I'm not just speaking directly to parents who have kids like myself, but also people who are just in positions where they have an opportunity to teach and inform people, because dividend stock investing is for everyone. And like I said, is the meta level backdrop here. Our society is changing. There is no more important time in the history of humankind than right now to be an investor, in my humble opinion. And so I want to shift gears a little bit here and go into something very exciting. I have a cryptocurrency channel. I will link to it in the pinned comment below and the description below. Keep in mind, crypto is a sliver of my portfolio. It is not my main focus, but it is something I'm passionate about. And I feel that crypto, aside from being a good investment, in my humble opinion, it is the future. And I believe that blockchain technologies like ALGORAND, they are the future. I just sat in on the Decipher conference that ALGORAND had this week, and it blew my mind. And so what I'm starting to do, in addition to teach my kids about dividends and just general investing, is I'm just getting them involved with computers and with blockchain, just to show them some basics about where our world is headed, because I think that could be a possible career path of the future. But what I decided just today, this holiday season, is I did set up an ALGORAND wallet for both of my kids, and I transferred ALGORAND into each of their wallets. And it's really exciting because that's a asset that actually pays a staking reward, or passive income, if you will. And so it's a great opportunity to learn about passive income and also blockchain and so much more. And so as you can see on the screen in front of you right now, I get a lot of questions all the time from parents. Ian, what are you doing? Or how do you look at younger people? And again, this isn't just for parents with kids. If you're watching this channel and you're younger, maybe you have a little bit more of a risk tolerance, hey, you may want to look into ALGORAND and just learn more about it, or blockchain in general, because these are the types of higher risk strategies, but could possibly be warranted in someone that has a very high risk tolerance and a very long-term outlook. And before I even get into ALGORAND, what I would also say is so exciting about kids being investors is, unlike adults, Kids don't look at the stock market every day. Unlike adults, kids don't want to watch the news and the media and get caught up in the emotions. They're just out living their best life. And so what's so exciting is I think kids can make the best investors because they're truly passive investors. And so I love this fact that my son, he's not worried if his Hershey stock dips or his Disney stock dips on a day-to-day basis. And so same with cryptocurrencies and blockchain, there can be some pretty big corrections during like the crypto winters, if you will. But kids, they're not too worried about that. And so it's just an exciting way that to think that as adults, we can learn a lot from our kids, because I get questions all the time, Ian, how do you deal with the volatility? Well, one, I like to diversify, but two, I try to learn from my kids and not just get tied up in the emotions of it all too much. Anyway, as you can see on the screen right now in front of you, I wanted to go through some few simple steps just in terms of how I went about, like what did I do today to gift some ALGORAND for Christmas to my kids? Well, I followed these simple steps twice, once for each child, but I went to my ALGO to create a wallet for each of them. And the important thing about this is the My ALGO wallet, it's not on a centralized exchange or anything like this. This is truly decentralized finance. And so they, anytime in the future, as long as they have all of the important key phrases stored in a safe place, they can go enter their wallet from anywhere in the world and don't have to worry about a particular exchange going out of business or anything like that. And so what I did is I wrote down all the 25 key phrases and stored in a safe place. I wrote down the password, stored it in a safe place. This is very, very important. If those are lost, the money is lost forever. And I went ahead and I bought some ALGO on Coinbase, and then I was able to transfer from Coinbase to their wallets. And what's so fun about ALGO and why I love it for kids is the cost of transactions is very low. I was originally thinking, should I buy Bitcoin for my kids or Ethereum, for example, both of which I own? The reason I didn't do that is the cost to transfer those on the blockchain is really high, and it makes sense for larger sums of money, but I'm just talking about my kids here. They're starting out really small, and I also wanted to set them up for success if they wanted to invest any of their future allowance money, even say $5 or $1 at a time. If they wanted to do that into ALGORAND, I wanted to set something up where the transaction fees are really low, and in general it costs like 0.01 ALGO to make a transfer, but to go from Coinbase to the wallets, it was like 0.02 ALGO per transaction, which, as you can see on the screen right now, was really low. It's like 4 cents, and so nothing. And it's almost instantaneous as well. In my opinion, this is the blockchain of the future. Now, because ALGO, as I mentioned, it's so fast and cheap to transfer, and because the blockchain is becoming the backbone of our future, in my humble opinion, I think it's a great chain to teach kids about investing and about technology, computers, the internet, decentralized internet, so on and so forth. Now, it's important because there are staking rewards to just keep in mind that you will need to track their interest, and you don't want too much money in the kids' ALGO accounts because that $2,000 limit could be reached. And so in terms of future steps, periodically I intend to review these ALGO wallets with my kids. I want to see if they can transfer some of their allowance money in the futures to ALGORAND with these very low fees. And I want to even set them up for success and explain to them about decentralized finance and even NFTs with obvious parental supervision is important and help. But I want to get into some of those topics with them and explain to them how it all works. Because I know when I was a kid, it was very different. This was before the internet, but I spent some time on the computer and it really set me up for success in life. I think it's a balancing act. Kids should never spend too much time on the computer, but a little bit with that parental supervision, I think is really, really helpful. And so I know this is a channel about dividend investing, but I did want to give that example because look, even in 20 years' time, ALGORAND is gone. I think the lessons that could be learned through interacting with that blockchain with your kids could be huge in terms of investing and also technology benefits. But personally, I think in 20 years' time, ALGORAND is going to be successful and bigger than it is right now. And so let me know in the comments section below, how do you look at this all? How do you look at it when you're looking at the long term, when you're looking at future generations, or even just looking at your own life, but you're looking over the real long term? How do you plan for that strategically with investments, whether it's dividend stocks, crypto, or other forms of investments? I would love to know. If you enjoyed the video today, please go ahead and smash the like button. It really helps me out. It helps this channel reach more people. There is no more important time in the history of humankind, in my humble opinion, than now for folks to learn about dividend investing. So if you smash that like button, it helps this message get out there. I think it's really important. I think just as blockchain is decentralizing finance, dividends provide a lot of power to the individual, and this is the time when individuals really need that power. So thank you for that. Please go ahead and subscribe as well. I always have new videos on the way. And as I mentioned in the intro, check out the pinned comment. I have a really great Patreon with lots of bonus content, and I am thankful for all the support there. It fuels what I do. All of these videos on YouTube right now would not be possible without the generous support of my patrons. So I am grateful. I wish you all a really happy and blessed holiday season. I am so excited the holidays are here. It's hard to believe. Before I go today, in terms of a full disclosure, I am long the assets mentioned today, or a lot of them at least. I am long Hasbro, ticker HAS. I am long Coinbase, ticker COIN. And I am long the Home Depot, ticker HD. Also, I am long ALGORAND, ticker ALGO, Bitcoin, BTC, and Ethereum, ticker ETH. Both of my kids are long the Hershey Company, HSY, and also Disney, DIS. And they're also now both long, as of today, ALGORAND, ticker ALGO. Before I leave today, I do want to mention, in terms of a friendly disclaimer, today's video doesn't offer tax advice. I'm not a licensed tax advisor. It's really important to check anything related to taxes with your tax professional. Also, I want to mention I'm not a licensed investment advisor. I'm not sharing financial advice. Today's video, it's just for fun and entertainment. I'm just sharing my journey here on YouTube, on the internet, for fun and entertainment. If you're going to go out and invest, please consult your licensed financial advisor first, your licensed tax advisor first, because it's possible to lose a ton of money in the stock market, in crypto, all of that. It's very risky. And so I'm just sharing my journey here. Thank you again, everyone. I look forward to seeing you in the comments section below.